Welcome! When most people look at silver, they ask a pretty simple question. Did the price go up or did it go down? But that question, well, it misses the real story, and sometimes it misses the real risk. Today, we're going to investigate a fascinating little mystery, why some of silver's biggest, most important moves don't start with a bang, but with absolute silence. Okay, let's just dive right into this, shall we? We're always told that for a market to make a big move, you need big news, right? Big headlines, a ton of activity. But what if the most powerful moves happen for the exact opposite reason? What if they're born out of quiet, when hardly anyone is even paying attention? That's the puzzle we're going to piece together today. Here's the thing. The real danger isn't always in the price itself. It's in the underlying condition of the market. And that condition, well, it's often in its most fragile right at the start of the week. So we're going to do something different. We're not just going to track numbers on a screen. We're going to become observers of behavior. Now, to really get to the bottom of this Monday mystery, there's one key idea we've got to talk about. It's called liquidity, or, as I like to think of it, the empty room problem. Let's break down exactly what that means. So what on earth is market liquidity? Well, simply put, it's all about how many people are in the room ready to either buy or sell. If the room is packed with people, it's easy to make a trade without really disrupting anything. But if that room is nearly empty, any single person making a move can have a massive impact. This slide really paints the picture, doesn't it? On the left, you've got your busy market. Think of it like a bustling auction house. Lots of bids, lots of offers. Prices get negotiated smoothly. It's orderly. But on the right, you have a quiet market. And this is often what you get early on a Monday morning. With so few people around, there's no real negotiation. Instead, prices can suddenly jump, or gap, just to find the next person who's willing to trade. That's when things get fragile. And this, right here, is where it all clicks into place. This is the heart of the matter. Let's connect this idea of a quiet, empty market directly to those sudden, sharp price moves that seem to come out of absolutely nowhere. This quote is just a fantastic piece of insight. We tend to think that a really fast price move has to be caused by some overwhelming force of buying or selling. But so often, the exact opposite is true. Speed comes from an absence of opposition. It's not about someone giving a powerful shove. It's like leaning against a door that you thought was solid, and it suddenly swings wide open. So here's how it actually plays out. Picture it. A buy or sell order comes into the market on a quiet Monday, but there's nobody on the other side of the fence to take that trade at the current price. So what has to happen? Well, the price literally has to jump, either up or down, until it finds the next person in line. And just like that, a price gap is born. And this is such a crucial distinction to make. In a healthy, busy market, buyers and sellers are trading. It's a two-way conversation. But in these fragile, quiet moments, the market isn't really trading at all. It's relocating. It becomes a frantic, one-sided search for a new price level where that two-sided conversation can finally start up again. Okay, so that's the theory. But how can you actually see this stuff in action for yourself? Well, let's shift gears and look at a practical checklist, a few things you can start watching for to get a sense of the market's real health. So instead of just staring at the price, start asking these questions. First, timing. How is the market reacting in those first couple of hours? Is it jumpy? Next, response. When the price does pull back a little, does it snap back with confidence or does it seem hesitant? Then, pauses. When things get quiet, does it feel calm and, well, boring? Or does it feel tense? Tense quiet is a big warning sign. Then follow through. After a move happens, is it respected or does it get fought back right away? And finally, evolution. Does that fragile feeling from the morning just fade away as more people show up, or does it stick around all day? You see, the point is, these little behavioral details, how the market pauses, how it responds, how it feels, these things can tell you so much more about its real strength or weakness than any news headline you're going to read hours later. It's the real story happening right in front of you. And hey, just for a moment, if you're finding this explainer useful, a quick like, share, or subscribe would be fantastic. It really helps us keep making more of these for you. And this whole thing isn't just about what happens on Monday. What goes down in those first few quiet hours can actually set the entire tone for the rest of the week. It creates a kind of ripple effect. When one of those sudden price relocations happens on a Monday morning, it's like a wake-up call for the entire market. Every trader, every investor is suddenly forced to rethink their risk. They get more cautious, right? They become more defensive. They might pull back on their positions because they've just had a sharp reminder of how fragile things can be. And that cautious, defensive mindset, it's contagious. If everyone gets a little spooked by a shaky Monday open, they're all going to be less willing to step in and provide that smooth two-way trading for the rest of the week. That early fragility can spread, and it can make the market much more likely to have those abrupt moves on Tuesday, on Wednesday. You get the idea. And really, this quote just sums it all up perfectly. The market's actions, its behavior, will show you the signs of stress long, long before you hear any experts or analysts talking about it on the news. Watching what the market does is just so much more powerful than listening to what people say. So as we wrap up here, I really want to leave you with this one powerful question to carry with you. The next time you're looking at the market, especially on a quiet Monday, don't just ask if the price is going up or down. Ask yourself this: is it trading in a calm, orderly, two-way conversation? Or is it relocating in a frantic, one-sided search? The answer to that question will tell you almost everything you need to know. Thanks for tuning in.